Hi, good evening, everybody. This is Nitin Raheja from the Investment Committee of Satco Capital Markets, which runs the Satco PMS. Uh, you all have been, in the last few days and weeks, hearing a lot of commentary from fund managers, giving you their views and perspectives on the capital markets and the state of the economy. I will not go into that area, but after having heard all of that, one of the key theme that emerged to me, what everybody is speaking about, is that there is great uncertainty all around us. Uncertainty in terms of the fact that we yet don't have a cure for the virus. Vaccine is yet far off. We don't know how long the lockdowns will last. Uh, we don't know post lockdown what is going to be the actual impact on industry, businesses, and how the economy will come back. We don't know whether consumers will have the risk appetite or the instincts to go and spend like they were doing so earlier. Also, we do not know how the markets will behave given the kind of choppiness and volatility we've seen. In light of all of this, it's very natural for people to be fearful and confused. Uh, what we thought, and I thought, is we would look at what are the certainties that we know of. A lot of what I'm going to talk to you is not anything which is rocket science. It is simple, common, basic sense. So what are the certainties? The certainties are that good managements and good leadership companies do well in good times. They do even better in bad times. They use such times and capitalize on it and gain market share. Companies with strong balance sheets, which is low leverage, strong working capitals, and good cash flows, not only survive such times but actually come back stronger from such times. Businesses which cater to essentials, which look at non-discretionary spending or certain essential discretionary spending, as the definition of discretionary differs from person to person, as such, are traditionally also businesses which have very strong cash flows. So these are things which we said we were already doing. However, the big difference was a lot of these businesses would enjoy premium valuations and would deter us very often from investing. However, this opportunity presented to us an ability to buy into some of these businesses at cheap valuations. So, what did we do? Let me just quickly tell you what we do at Satco PMS and how we reacted to such an event. The growth and momentum portfolio of Satco now has completed its almost 8.25 years. We have delivered a 24% compounded return vis-a-vis the benchmark, which has done an 8.3% compounded return for this period. In 7 out of these 8 years, we have beaten the benchmark quite comprehensively and have actually delivered positive numbers. And I'm talking of calendar years out here. How do we do it? Again, we look at businesses which are going to double their profits every 4 to 5 years, and that gives us the kind of return that I mentioned that the portfolios have delivered, which basically means that we are looking at long-term investing rather than being short-term and catering to current market facts. Going into this crisis, our portfolios were outperforming. In fact, in the calendar year, we had up to Feb end, we had a 10%, or even mid of March, we had a 10% outperformance vis-a-vis our benchmark, which is the CNX 500. So we were up almost about 5.5%, and the CNX 500 was down minus 4.5%. As we got into March, the high weightage that we had in our financials impacted us. And mind you, within financials, we held private banks, and the top 4 private banks in that, which was the HDFC, Axis, Kotak, and ICICI, and we had the 2 top NBFCs. So we had a which was HDFC and Bajaj Finserv. So we had a top tier financial services portfolio. However, that did not stop us from being impacted by the broad sell-off that took place in the financials in the month of March. We immediately went to the drawing board. We saw that the pain in financials is going to be a little long drawn, as delinquencies will rise, considering that we yet don't have a solution on how long, and this is not going to be a V-shaped but a long drawn U-shaped recovery. So we trimmed our financial portfolio. Uh, Now that's practically all we did. I'm glad to tell you that we came back very strongly in the month of April. Our portfolios are up over 10%. The rest of our portfolios, we did minor rejigs. So, for example, going into we had a 10% plus weightage as far as the gas distribution business was concerned. A business we see having strong cash flows, clean fuel, regulatory momentum behind it. We in fact added a little bit to our position out there. Um, those are some of the things which will come back the fastest once the lockdown is lifted. We already had a holding in pharma. In fact, we held probably one of the cheapest pharma stocks in our portfolios. A company which is one of the strongest API manufacturers in the country. So even before this whole talk of moving API manufacturing from China to India, we were already holding such, and that stock has given us a tremendous return. In fact, it is trading close to 52-week highs. We already had a fair holding in chemicals in our portfolio, even before the whole crisis erupted. And in fact, when Wuhan happened, we in fact had already increased our weightage out there in our portfolios. What we did during this time also was we raised a substantial portion of cash because we see, as I told you, a long, painful U-shaped recovery. A part of that cash was deployed in buying gold Bs, which played out well for us. We also bought a yield-oriented asset at a very attractive pricing within our portfolio. We used this opportunity to look and shop for MNCs. MNCs which have traditionally traded at tremendous valuations and premiums. We used that and added that to our portfolio. Within the financials also, we had done a rejig, as I told you. We got into the non-fund-based financials within our portfolio. And all of that, has really played out very well for us. Of course, some of our mid-cap names have also borne grief in this sell down. But we are pretty confident each of those businesses have the attributes that I talked to you about. They are market leaders and they will come back. In fact, some of them have been in the process of buyback in such markets and are using their cash flows really prudently in such markets. So all in all, that's really contributed to why our portfolios have bounced back strongly. Going ahead, we think that this is going to be, as I mentioned to you, a long drawn recovery. Markets are going to be choppy. Quite honestly, we don't know which direction they will go. Frankly speaking, as I told you, those are answers which I don't think anybody knows. However, we know that our portfolios are well positioned, whether the market goes down again from here or the market goes up from here. We have sufficient gunpowder in the form of cash to capitalize on the downturn. At the same time, the stocks that we own in our portfolio have ensured that even with such cash holdings, we have been able to outperform the markets from where they are. So we are fairly confident that we are well positioned in our portfolios. I wish all of you once again a good evening, and I wish you be safe at home and look forward to communicating with you again the next time around. Thank you.